Hello traders, welcome to the XAUUSD Trading Hub YouTube channel. In the last video, we basically looked at the fact that in GBPUSD, this is the daily time frame. I pointed the fact that we saw price fully mitigating this weekly bullish fair value gap. And I told us that since we have an institutional order flow here, where we can see that this bearish movement took out the sell side liquidity, I told us and I pointed the fact that we should expect the possibility of what's having a bullish movement to the upside. And clearly, we'll be looking at how price returns into this weekly inversion fair value gap that was violated. And in extension, I pointed out this breakout block here because this is the last sell candle before the bullish movement that took out this high, also taking out this consolidation moments here that we saw in the charts. So what we can now see is how price traded bullish into that inversion, and in extension price traded further to the upside, because what we can now see is doing away with the weekly inversion fair value gap that was violated. We can see clearly here that we have this daily inversion fair value gap. And what we can see in the daily inversion fair value gap is that price has mitigated now the daily inversion fair value gap, and we are seeing how price is going to the downside here in GBPUSD. So this is a bullish fair value gap, but then we can see the momentum to the downside, this other bullish fair value gap too here. So we can see the momentum. So why I told us to expect bullish movement is because we know that for price to continue bearish, to the possibility of going down to this bullish fair value gap, which is the next drawn liquidity, we want to see, since price has filled up this bullish fair value gap and also filled up this, so it is for us to see a return to retest, and then the possibility of what bearish continuation into this drawn liquidity, or we could see price journey more higher into this bearish fair value gap. So I pointed out the fact that price has fully mitigated the weekly bullish fair value gap, reacting at this institutional order flow. So I told us we could frame bullish movements in a lower time frame, which clearly I also traded the bullish movement. I shared that setup in the free Telegram community, not really before taking the trade, but after, just to explain some of the things I told them to look out for in the daily forecast I released regarding this pair and other pairs like the yen baskets, the Euro USD also. So we can see now price have returned, mitigating this as the daily inversion, and we're seeing volume giving us the possibility of wanting to close below the inversion. So if this volume close below this daily inversion, then we may see price continue bearish to the downside here. So let's check the 4-hour time frame. This is GBPUSD in the 4-hour time frame. So we can see this is the daily bullish fair value gap, which is within the institutional order flow zone. So we can see also in the 4-hour is a bullish fair value gap. We can see the movement to the downside, price to cut the sell side liquidity, and then sponsor this bullish movement to the upside. So clearly now we can see that the daily inversion fair value gap, how price return into that, and now we are seeing price giving us the possibility of continuing bearish to the downside. So basically, if GBPUSD is going to continue bearish to the downside, then we may see the possibility of bullishness occurring then in the dollar index. But what we can just point out now is price reacting at the inversion fair value gap and giving us this bearish movement. So we have this breaker. Price has not really mitigated the breaker. So in the 4-hour time frame, we can see we have this bearish fair value gap. So price also returning to that, which is within the daily inversion fair value gap, and we're seeing this bearishness to the downside. Let's check the 1-hour time frame. So here in the 1-hour time frame, price traded higher to the upside, mitigating this mitigation block, because what we can see is that price did not take out this movement to the upside, did not take out this high point. So these are relatively equal high points. So we have relatively equal high points here. Price gave the displacement. So this is a mitigation block. So price mitigated the mitigation block, returning into the daily inversion fair value gap. And we're seeing this bearish movement to the downside, though we have this drawn liquidity to the upside. So basically, if price is going bullish, this is a drawn liquidity. If price is going bearish, this is a draw on liquidity. So what we can see is, to me, we have here a rejection block here in the 1-hour time frame. We have this rejection block, which I believe in the 15-minute or 30-minute time frame, we could see a bullish order block there. So clearly now, why I told us to expect bullishness was now in the lower time frame. When I came to the chart, what we can see is during the London and the New York session, we had bearish trend to the downside. So I saw price here giving us the single candle order block, which I pointed out to us during the forecast I released in the YouTube channel. So we can see the single candle order block when price fully mitigated the weekly bullish fair value gap. So I expected to see how price return to that. If price gives us a reason to go bullish, then we go bullish to the upside. So price return to the downside, and we saw price swept this low point, but then volume closed above that. Let's check the 15-minute time frame, because that was where I decided to frame the entry, and then took the entry in the 5-minute time frame upon establishing more confluence. So this is it here in the 15-minute time frame. So I saw price, this is it. When we turn on the session indicator, let's do that so that you can clearly have the perspective to what I saw and why I took the buy movement you're seeing displayed on the screen. So what we have, we can see this is London gave us bearish, ISO session gave us bearish. So I was expecting to see that the London New York close may give us the bullish movement. And clearly now we can see that price gave us this bullishness, which gave the single candle order block in the 1 hour time frame. So I saw price return to the downside, taking out the low here, the sell side liquidity, and then I saw this volume closing above, and further I was seeing the candles printing to the upside. Then that was when in the 5-minute time frame, let's get to the 5-minute time frame, guys. In the 5-minute time frame, what I saw was this. The entry was executed from the 5-minute time frame. What I saw was, you can also see in the 5-minute time frame, price took out the sell side liquidity and gave us what? A single candle what? Order block. Volume closed above, and the next candle volume closed above this high point, and then we had this return, price return to the rejection, and then bullishness. So I saw price took out this high point because we have a sell movement, but price went bullish. So that was where I executed. I put on my entry here, and the stop loss was, I think, below the low here. And then I was targeting to see price takes out this buy side liquidity and in extension return into this bearish fair value gap, and that was the target, and that was where I took my profits from. So when I took the trade, the buy setup, and price got to the targets, and then what we saw was how the London session took out the Asia session high point. So I expected bearishness, because what I can see, or what I saw, was this was the bearish movement that sponsored bullishness that took out the Asia session high point, and we saw this bearish movement beginning to happen. This was the candle I saw at the time I was at the chart when I noticed that price took out buy side liquidity during the London session. So clearly I wanted to see price return to the bearish order block, and then we have the bearish continuation, and then I was looking at this bullish fair value gap as the target. So what we can see is that price returned, but then price just reacted at this fair value gap and continued bearish, leaving my order without activating the order, and then went bearish to the downside. So I'm just giving you guys a very quick review. So what I'm expecting to see now is, what we can see is, so I said let's take this rejection block, and we can see price straight into the downside. So if we're going to have bullish continuation, then price should not violate this rejection block, except you're going to see bearishness to the downside, to this draw on liquidity. So clearly now let's check the 15 minutes, let's check the 30 minutes time frame. Here in the 30-minute time frame, basically you can see we have the push, the fall, when price fully mitigated the fair value gap, reacting at the institutional order flow. Price took out sell side bullishness, market structure shift, price return continued bullish to the upside. Now price have returned, mitigating the mitigation block. Also here it's a mitigation block, and then we're seeing this fall to the downside. Let's check the 15-minute time frame to have a more clear structural perspective. So in the 15-minute time frame, what we can see is, I told us we're going to see the possibility of a bullish order block. So here we have the bullish order block. The price here return mitigated that, but we still have price have not mitigated the mean threshold. So what we can see is price took out sell side bullishness, market structure shift, return taking out sell side here, and then we can see price push to the upside, breaking structure here. So we have this liquidity. You can see how price now return taking out this liquidity. So if price is going to continue bullish, then I'm not expecting to see price breaks through this bullish order block. Then we could have the bullish continuation to the upside, to the drawn liquidity here, since what we can see is we have this relatively equal high points. But from the daily time frame, let's get to the daily time frame. Though the delivery is still on, I'm just giving us a quick review regarding the trade setup I took, but then we're still looking at the possibility of a movement we could see. The candle is not yet established, so but we can see rejection out of this inversion. So if this volume closed below that, then we could see the possibility of bearishness to the downside. But for now, I'm still temporarily what? Bullish. Let's check the 15-minute time frame. So in the 15-minute time frame, just the way I said, if price violates this, then we could consider that price wants to go back into this bullish fair value gap we established from the daily time frame. But what we can see already, we're having this impulse after price has taken out the sell side. Let me see. Is price taking out the sell side? Okay, not really. So price is not taking out that sell side. But we can see that price is taking out the sell side liquidity. And we are seeing this impulse. So basically it means if price is going to continue bearish, then price should respect this bearish order block, and then we have for the bearish movement then to this bullish order block. If price violates this, then definitely we know that price is being attracted to this drawn liquidity to the downside, the bullish fair value gap. So what we can see in this delivery here on Wednesday, we can see how price took out what the Asia session high point during the London session, mitigating the mitigation block we saw from the 1 hour time frame, displacement to the downside, market structure shift, return, and the bearishness to the downside. So this is basically what I have to show us on gold. So if you're bullish, then you want to see how price reacts at this bullish order block. If it gives you the buy model in a lower time frame, your 1 minute, your 2 minute time frame, or your 5 minute time frame, then you want to go bullish. But then if price violates this, then we know price is attracted to this drawn liquidity, the bullish fair value gap. So this is what I have to show us in GBP, a quick review and a likely possibility of where price may be heading to. I'm not going really into details. Just let me give you guys a review regarding the trade setup I took in the GBPUSD pair. So let's check out the gold pair, guys. So this is gold. I'm going to give you guys a quick trade review that I took in gold, and also a conversation I was having with one of the persons learning how to trade from me. And basically I create time to be able to communicate with those learning from me individually. So what we can see, we've been pointing out this weekly bullish fair value gap and how we've been expecting to see price return into it, and we have bullish continuation. So this is a weekly time frame in the gold pair, and we can see clearly how that's returned to the downside. I told us based on the CRT concept, we can see how price took out this high. We have this crazy rejection to the downside, volume closing below. So I told us to look into the possibility of price returning to the bullish fair value gap, and we have bullish movement to the upside. When we get to the daily, so in the daily time frame, I also establish how we frame bullish movement here from this bullish fair value gap, because when we identify this bullish fair value gap, when I was releasing the focus for this particular movement, I told us we could see bullish movement here and not price necessarily dropping into this, which we also saw in the 4-hour time frame. I think a consolidation zone where we framed the rally base rally. I can't really remember, but it's one of the focus videos released already in the YouTube channel. So we can now see how price have traded to the zone we've been looking forward to, and we can see that bullish reaction to the upside. So let's get to the 4-hour time frame. So here in the 4-hour time frame, basically this was the movement. So this was framed from the 15-minute time frame. We're going to check that in the 15-minute time frame. So we saw the bearish movement to the downside here and to the sponsorship zone. In the 4-hour, you can also see we have bullish fair value gap, and now price are giving us the bullish movement. Upon return in the 15-minute time frame, I saw an entry model, and then I took that to see price takes out this buy side liquidity. So what we can see, basically this was me when I was trying to explain something to one of the persons learning from me. I told him we could see the reaction of bearishness from this level. Actually I also marked this level during the weekly forex focus. You can check the weekly forex focus. The video is on the YouTube channel, where we could see the potential bearish movement from here. So what we can now see is the fact that that just happened, and currently I'm actually chatting with him, so I also called his attention to that, and he was just amazed, asking me how did I know we're going to have a sell move there, because he was intending on taking a bullish movement, but then I called his attention to the fact that the bullishness is quite somehow high, so we could see, and then price is already coming into a zone marked out, and then I pointed out this with a circle. You can see the charts with him displayed on the screen, the screenshot to the chart we had displayed on the screen here. So I told him we may see bearishness, and we can see clearly that just happened. So let's check the 1-hour time frame. So in the 1-hour time frame, what we can see, these days I didn't really take any position. That is Monday, yeah, Monday, Tuesday. There wasn't any reason for me. So it was at the close hour on Tuesday, I saw a reason to want to take this position. So basically, we're going to the 15-minute time frame and we're going to look into that. And we can see how price returned here. And now we're seeing that bearish reaction to the downside. I explained to him why I looked forward to see a bearish reaction from this level that I marked out. So let's check the 15-minute time frame. So here in the 15-minute time frame, let's just turn on the session indicator. So what we can see here in the 15-minute time frame clearly is we had this movement to the downside. This was Sunday delivery, and then Sunday still went bullish to the upside, and then giving us this Monday started because this was Asia session that gave this movement. So we have Monday, London, New York. Was the delivery was just somehow so crazy, and then we saw how price then traded to the downside that same Monday. So I didn't really execute any trade setup yet. And then we started seeing Tuesday began the Asia session, price traded to the upside into this bearish order block. I also did not execute this, price traded to the downside again. So what we can now see was how I saw price trading here during the London, New York close, and then during the Frankfurt session. And we can see price side then there's all this movement here. So what I identified was how price dipped the downside here, taking out this low, and then we traded to the upside, and price again returned, failing to continue bearish. So clearly, and this impulsive candle was created. Since basically price have mitigated this zone, which is the identify higher time frame point of interest I had. So I just looked at the fact that since I'm seeing here, price is just consolidating, giving us this choppiness. So clearly it's more of like a manipulation occurred already to take out these low points. And then we can see now bullishness, price again return, and then I saw this candle to the upside. So I decided to execute here the stop loss below here. So this was during the Asia session. It was during the Asia session this happened. So I was on the charts during that particular time period, and then that was why I was able to see this and then traded that to the upside, expecting to see price just takes out this buy side. And basically I used the concept of wanting to see the Quasimodo. So I know this is not a clear Quasimodo though, but I marked out this high because I saw this fall, pullback, fall, price broke this, return again, took out the high, price again fell. So I was expecting the possibility of price just coming here, though I was looking at how price may take out this buy side. But then I decided to just work with this high point. Since this came to the downside, took out this low, but price went, seek the buy side, and then fell to the downside. So that was why you can see this is the targets, and price traded there, and that was all. So I didn't really take another entry. So I think he called my attention to the chart when I think price was around here. I can't vividly remember, but I think price was around here. If he could take bullish, I said, yeah, the possibility exists, but then I have this level marked out where we could see a fall to the downside. So it's not really wise. It is not really advisable to want to take the buy, and that is not really a pullback level. So if he was to take a buy movement, possibly from here, which was actually in the New York session, and this candle is the 8:45 a.m. New York time zone, which wasn't bad, but he wasn't on chart, I think, by this time. I think he showed me that when price was here. I can't really remember though, but you can see from the chart displayed in the screen. So, and now we can see that bearish movements. So for the gold pair, I just wanted to give us a quick review on the setup and the conversation I had with one of the student learning from me. So cheers guys, and God bless you all.